get your thoughts on the banking sector's performance this year. I know you're a banking analyst. It's up by the ARM banking index about 14%, so pretty strong performance so far. I think a question we should be asking ourselves now is there any case for reviewing target prices now? Because we know the banking sector has, even though it performed well last year, we know it's still below where fair value should be for many of these companies.
Sure, the banking sector performance has been quite impressive, like you said, and I would say if you look at where valuations are right now compared to our 2013 price tag, 2013 earnings estimates, there's, shall I say, credible reasons why you should be reviewing your target prices upwards from the 2012 levels. So I'll say on average, you'd expect earnings upgrades of about 13%. So target prices in line with such increases should be expected in some ways. But I would say if you are now looking at the risk sentiment, at this point I won't say the sentiment has reduced significantly because one, we haven't seen full year results of the banks for 2012, and so tier 2 banks especially, where historically they've disappointed the market, we could still see that. Yeah, I would say there's still a risk that, I would say there's still some forecast risk in the names, but with the tier 1 banks where they've proved, especially GT Bank, to be consistent with guidance, you would expect minimal risk in such names. And that's why if you look at, in valuing the banks, we apply lower betas to the tier 1 banks. So banks such as GT Bank, we apply betas as low as 1.1, while banks like Skybank and Diamond Bank, where we feel there's more risk, we have betas as high as about 1.7 to those names. So I think until we start seeing more consistent earnings and see some consistency with guidance as well, that's when you expect that risk to go off. Also, I'll say by the time earnings start, if you start seeing compression in ROEs, that if you compare where the likes of GTs at the tier 1 banks are compared to the tier 2s, by the time you start seeing compression in ROEs as well, then you should start seeing some revision, downward revision in beta estimates for such names.
You mentioned Skybank and Diamond Bank. We just put up their graphs, clearly done very well this year. We now begin to think about the possibility of public offerings. The CEO of the Nigerian Stock Exchange, Oscar Ima, suggesting that he thinks we would see an IPO this year. Do you think there's any case for banks, for instance, that need to show up capital to do a public offering right now, given the market conditions?
I would say at this time it's still early days. So even though we've seen very strong rallies in the market, these banks are still trading at reasonable discounts to book value and even exit PB multiples as well. And so if you see the likes of Skybank that's currently trading at almost 0.6 times, Diamond Bank at 0.8 times, it will be difficult to justify to shareholders that they should be coming to the market at this point. And you know, historically, the market would expect the offer to be done at a discount to market prices. So I think it would be difficult to justify that at this point. And that's why the likes of Diamond and even Sky has looked for tier 2 capital to show up their capital base. So until we start seeing the banks' valuations review upwards. So if they are trading more in line with where EM banking index is trading, which is at 1.4 times right now, by the time we see banks trading at that levels, I think it's at that point you start seeing banks come into the market for IPOs. And if you use UBA's rights issue, proposed rights issue for proposed offer for 2011 as an example where they intended to come to the market at a premium, but they ended up withdrawing the offer. I think it gives the sense of how the market and how shareholders will be viewing, shall I say, public offers at this point. So in my view, I'll say where valuations are, it's improved all right, but at this point it will be difficult to justify to shareholders coming into the market at a discount.